Hello traders, Gary Wagner here. It is 11:12 in Honolulu, 5:12 in New York on Monday, 3rd day of April 2023, and this is the Daily Report for gold and silver. Over the last couple of weeks, we have been intently looking at gold as it traded in a compression triangle. In other words, a range which is characterized by a series of lower highs and higher lows. We broke through the upper level resistance line, and that is significant. That will be the topic of today's show. A solid upside surge in gold pricing today, taking the most active June contract to $2,001.70, a net gain of $15.50 or 0.78%. Part of that gain today was the direct result of dollar weakness, down 0.44%, with the index currently fixed at 101.735. Lastly, the disconnect between gold and silver continue, with gold trading higher today and silver trading lower. Silver declined by about 5 cents, with the most active futures contract currently fixed at $24.10. Today, gold hit a major milestone, one that we have not seen since the beginning of March last year, 2022, and that is that gold effectively closed above $2,000 per ounce. The question is whether or not it can sustain that price point. We're looking at a daily chart, the continuous contract of futures. I draw your attention to the last occasion in which gold traded and closed above $2,000. Effectively, it was on March 8th when it opened at approximately 1980 and then closed at approximately 1965 after hitting an intraday high of just shy of $2,078 per ounce, $10 from the all-time record high. That takes us to the current rally that we're in, and the fact that we've identified a chart pattern known to the Western trader as a symmetric triangle chart pattern. There are variations of that, bullish and bearish. This, of course, is the bullish, in which you have the lower support line being an ascending support line, the upper one forming your resistance line, and it is descending. The idea is it will attempt to trade above or below support and resistance until it hits the apex. And at that point, in the case of a bullish symmetric triangle, you will get a solid breakout point. Elliott Wave calls it a thrust to the upside. Traders, as you know, we have been looking at this compression triangle, and we have been looking at it in terms of how the count would go for Elliott Wave. It is composed of an upper level resistance line, a lower level support line. Of course, the support is ascending and the resistance is descending. I had incorrectly labeled it with numbers, but I've corrected that, meaning we had our first wave A, our B, our C, our D last week, and then our final E. What we had today and Friday, what is simply called a thrust. A thrust is the point in which prices effectively trade and close above that. We're currently trading at $2,000.70. The question is whether or not gold will sustain that price point, especially since gold traded above the compression triangle last week right here. You can see that intraday high, but that was unsustainable. So we want to see gold close above and stay above $2,000 or slightly below before we enter our next trade, and we will buy this breakout if we have a solid indication that gold is able to hold at this new price level. We'll send out an SMS text message as well as an email to that effect when the time is right. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.